Hey traders, Raghee here. Welcome to Charts and Coffee. It is the last day of June, so we've got end of quarter shenanigans at possibly their peak. We saw the market take a little bit of a breather on the window dressing yesterday, but remember Monday's window dressing was pretty extravagant. So I wouldn't suspect to see anything more than that. Remember, we've got the collision of window dressing and the collision of month-end redemptions that happen at the end of every month. Remember, window dressing is much more intense at the end of every quarter. And so we're definitely seeing where those two factors are meeting. So then we have, let's see here. We actually have OPEC coming up tomorrow. I've got my eye on that. We've got the July 1st OPEC meeting where we are largely anticipating an increase in the output, which is to say a decrease in the production cuts, however you want to look at it. And OPEC will likely do their best to really emphasize that action is in order to basically be preemptive about the 1.5 million barrel shortfall that is anticipated starting actually August. So again, they'll increase output, but they'll basically say the demand is there. That's why we're doing it. Fine print is please don't sell crude off. Okay, so apparently I'm getting every single text and reminder right now. But anyway, it's all good. Okay, so let's go ahead and get into our questions here. Again, thanks as always for joining us for Charts and Coffee. All right, so let's get into it. I'm pretty stoked. Today's day one of our live trading for the day trading playbook. So super excited to jump into that room here in about 17 minutes with y'all. All right, so first, good morning from Dubai. Hey there, Ben. Good morning from Louisiana. Hey there, Les. Good morning. Nova Scotia. I love it. Love the Charlie Brown music. I don't know that I consider it Charlie Brown music, but I do love it. It's called, what is that called? I think it's called A Spoonful of Jam is the name of that song. Spoonful of Jam. Who doesn't like jam? All right. So let's get to it. First question. Hey there, Alex. Good morning. My thoughts on Google. I have a few spreads and am waiting for a pullback to buy calls to potentially hold into earnings about 4 weeks out. Nice double green trending chart. So Google is part, and Goog for that matter, is part of the XLC strength story that has been steady even when the QQQ was sort of careening down the road. XLC, Facebook, Google, they knew exactly where they wanted to go. And so generally speaking, directionally, Alex, I believe we're looking up, and I agree with you. Here's the difference. Here's the difference in terms of the way in which we have the direction in Google versus the timing in Google. In other words, timing. Timing is the part of, especially when it comes to options, right? Now, again, as far as spreads go, spreads and just straight long call, long put, credit, debit, doesn't matter. Timing is really the option secret, if you will, timing, volatility, capitalizing on momentum. So if I've got a bullish directional bias and I want to sell credit, down markets are exactly what I want, a down day in an overall up market. If I want to get long calls, it's the same thing, right? I want to take advantage of bearish momentum to, as I like to say, blue light special those calls. So I'm with you on structure. I'm not bearish these markets. I don't see any reason to pick a top. Yeah, they're getting a little lethargic. That is true. But I'm going to continue with the expectation that we're going to move higher. Again, it's all the more important if you think the markets are getting a little lethargic to wait for those dips to build a position. So, Alex, I'm with you as far as how far out. That's, look, that's the unknown. The idea that we can time the market in terms of price, directionally get the market right, and then somehow master. I don't think time horizon is something that is easy. It's the hardest component as far as I'm concerned to sort of project or forecast. So frankly, I don't even try. I try to give myself as much time to be right, but I'm with you. I think we could probably continue to see movement higher. I'm with you that. I'm with you on that. PH, NASDAQ seems to be extended. I don't subscribe to extended markets. We were extended most of last year. I don't subscribe to that because here's the thing. Yeah, I agree. We are not in a vanilla trend any longer. We have absolutely put some space between the wave and current price that would exceed 1.5 daily price movement ranges. So I use a historical volatility sort of measuring stick, but I don't subscribe into extended markets because then what am I going to do? Short it? How many people thought it extended here and here and here and here? You get where I'm going with this? So I'm not going to step out on the tracks assuming that's where the train is going to stop. But the frustrating, let's admit to this, the frustrating part of parabolic markets when they've accelerated in a way that doesn't have these nice consistent pullbacks is where do you get in? So, there's different ways you can take advantage of buying, because remember, I think the frustration is, well, I can't get in. So if I can't get in long, well, I might as well short it. That's a dangerous danger. Again, I'm not putting ideas or words in anybody's mouths, but I'm just sort of talking broadly what the trap tends to be. So there are certain days, narrow ranging days, that will give us opportunity to build aggro long positions. There are different candle counts where I'll look for different averages to park a limit order. So, it is tougher because I think we're so far away from the point of validity for the trend. So we know that everything from 14.6 down to 14,000 even, a 600-point range, an entire range, is actually buyable to me. How do you place a stop on that? That's the difficulty, but I'm not going to fade this in some deluded attempt to think that I am going to pick the top into a retracement. I think that's really low percentage. And for the few times that we get that really nice ego boosting timing right, the fact of the matter is we're probably going to be wrong a whole lot more. That's my opinion. Okay. Definitely not trying to discourage anybody, but please think about it. What makes this candle any more extended than this one any more than yesterday, any more than the day before, right? I hope I'm making sense there. So I don't subscribe to markets being extended because I believe that trends are inherently an imbalance of buyers and sellers. That's what they are. But sometimes you're definitely right. That scale, tips a lot. But I completely hear where you're coming from, but I don't believe there's a setup there. Not for me. So next up is any insight into why financials are not moving up? Hey there, David. Good morning. I would think that with the buybacks and dividend hikes, earnings season, I'm with you. I'm sure there's some reason that mostly, here's what I think it is. Number one, let's give financials a little bit of credit. They've taken back 3/4 of the move. So it's not as if they haven't been able to almost get back to sort of what I call either the tie ball game, whichever analogy resonates with you, tie ball game where it's just back to 0-0, it's right back to where it was, or sort of the scene of the crime, right? Where we have the boom, boom, sell off. So whichever analogy you want to pick, that's just what I call them. And however you want to view that, clearly, I think you're right. It's just, I'm with you. Why aren't you moving higher? There's very little reason I would think that I can find to want to be short these names. Taking profits on these names, that's selling, triggering some bearish momentum, that happens too. So, maybe that was part of it. Supposition at best. However, here's what I will say. It's probably, think of it this way, where does attention go? That's where money flows. And right now, it just might be a matter of something better, energies better, tech better. So I think right now it's just competition. There's just competition in the markets for those corners of the few indices, two really, the handful of sectors that are relative outperformers. And so, yes, I do drink water every now and then. I think some people think I subsist on coffee. Almost. I do drink some water every now and then. I try to keep this giant pitcher of water to encourage me to drink the clear stuff as opposed to the beautiful black coffee. Anyway, I'm with you. It just isn't there. So I think we have a narrative, we have an expectation, but it's not syncing up with the price action yet, which is frustrating because that was a corner of the market that was so good to us for so long. Next up is, and thanks, David, for the question. Andre, BYND. I like the double green. I'd buy the stock. I wouldn't eat the stuff. I've eaten it. I've had it. Stock, yes. A fake meat burger, not so much. And you know what? What's really interesting right now? It was, and I don't know that this is going to factor into what's happening with the stock or not, but a lot of the trial runs for BYND, they're not expanding. I don't see that more and more restaurants are adopting it across more of their. It's kind of in an interesting spot. It looks like an uptrend. Clearly, the meat alternatives are still a very strong trend. And here's the thing with BYND. The reason I'm bringing up sort of the narrative, is there demand, is because this isn't attached to a larger narrative by way of sector or index. So it's not necessarily going to benefit from a high tide psychology. So BYND, for example, we're in the S&P. It would benefit from a rising tide or a falling tide. So we know that certain stocks, like boats, are going to move with the tide. BYND has to move on its own accord. So the narrative, the story, if you will, is really important, more so than a stock that's included in an actively traded sector or index. So with that being said, it's a double green. It's not one that's super established, but be careful. And if you're going to play BYND, probably even more important to look for specific entries like 624, June 24, when we pull back into the wave in a double green environment, not as we've launched higher, say, for example, 625, 628. That's awful timing. Yeah, if you got in on the 25th, you got away with it on the 28th, right? And that's not my cup of tea. But I think even more important with BYND is that pullback by to the resistance at 157. So I'm really looking at the wave 144 to maybe 157 as far as the window. So yes, buyable, but please, please, please focus on the pullback. Buy. I'm not crazy about it, but it's buyable. Get the timing right. And I think life is going to be a whole lot easier with the calls or whatever position you put on, whether that be the call vertical or whether that be the put credit spread. All three of those have the same timing. They're going to benefit from the same timing that I teach you all here in Charts and Coffee. CRWD, I don't have a pullback. Don't have anything actionable until we get down to likely the 13 to 21 exponential. Maybe a VWAP would be aggro, but I don't have anything on CRWD. I don't have an inside candle. Might be an interesting, there's a couple things here, but again, I'd rather see just a deeper pullback, quite frankly. Is it buyable? It's a double green. So at least, yes, we're looking at a path of least resistance. That's step one. Step two is, again, I love that analogy of the ball. Hang on, I'm going to grab my favorite picture here. The ball passing across the plate at a level that's actionable for us. This is the psychology. We are all Ted Williams, and we all have, we've broken the strike zone into 72 pieces, maybe not that many, but we've broken it down to where the pitch should come across our plate. The only thing that I can honestly and consistently share is where my preferred pitches are. But I think every trader at some point in their career does finally say, gosh, I need to know where my pitches are. What are my preferences? They're not all pitches, right? For some traders, the breakout is their pitch. For some traders, a consolidation is their pitch. For some traders, the pullback, like me, is their pitch. They're all great pitches. Different batters, if you will, are going to be able to connect with different pitches. And probably our biggest job as traders is to figure out what spot in that zone is ours. Okay, so please know when I'm saying yes and no, I'm referring to where I tend to make connection. I don't know if you guys can see it. This baseball thing, you might be able to see that bat. I don't know if you can see it sitting on my bookshelf or not, but that is definitely the psychology that I keep when it comes to day trading, when it comes to any kind of trading, heck, even my investments, right? I think it's really beneficial for investors to have a little bit of a trader's timing, and sometimes for traders to have a little bit of an investor's discernment and patience. So I think there is a little bit of that cross. And by the way, this is straight up Grandpa Buffett, straight up Buffett. Talked about it in Becoming Warren Buffett. This is, I think he's a big Ted Williams fan. I think he's got, of the sparse office that he has, I think one of the few things hanging on the wall is a picture of Ted Williams. So, I mean, that batter's mindset is an important one. As I like to say, the money ball of trading. Is gold dead? It's napping. It's napping. Nothing's ever, dead when it comes to something like gold, right? But I can appreciate the question. Charlie, no, I think it's napping. I'm not interested in a market that's napping. I think it's a little bit of a mess. I'm not interested in a market that's a mess. I'm just not into gold right now. We had some nice positions for a while in miners and in gold and in silver and in copper. Those broke. Thank you very much, Powell. What did he? I won't even blame Powell. Actually, for once, I will not point my finger at Powell. I think the market's overreaction to what was said is still something that is creating an ongoing mess in this environment. We can see real yields are dropping, generally speaking, but gold still has yet to get out of its own way. Very strange. These are strange, disconnected times. So no on gold for now. For now, as long as there is volatility and open interest, I'm still going to look for eventually some kind of setup. Napping for sure, though. How long a time period do I use to compare sectors for relative strength? Dan, if it's intraday, it might be 5-day look back. If it's longer term, I want a daily time frame swing. It might be a month or 3 months. It might be the quarter. So it really depends on the time horizon and the time frame. But those are pretty common for me. What should I be looking for an SLV long term? So I don't know what long term means, right? Meaning long term to me might be different than long term to somebody else. So specifically, what would the time horizon be? I think right now for gold and silver, if you're willing to have a minimum of 6 months, if that's your long term, pull up the weekly. Same thing goes with gold. Pull up the weekly and just have a minimum 6 month time horizon. Be patient. And so weekly might be the way to go. So if you're talking long term, again, I'll have to sort of plug in what's long term to me. What should you be looking at? I'm going to be pretty literal about that. I think you should be looking at the weekly. Yeah, at the weekly. We do the same thing with GLD. Not quite. I think SLV might actually have a little bit better structure, quite frankly. So weekly would be what you'd look at. Trend following on the weekly, I think, would actually be pretty actionable. So I would buy the underlying. So let's say you're going to go buy silver. You know what? I might actually go add to my SLV position here. Yeah, so that's actually not a bad. I'm going to put on the list. SLV. Buy shares. Okay. And just like that, Charts and Coffee is coming to a wind down. Thank you as always for your time, from India, all over the place today. Thank you, thank you, thank you. I will see you all tomorrow, same time, same station. In the meanwhile, be good to each other. Remember, end of month, end of quarter shenanigans. It is a caution day, but I think there could be some nice setups to be had. So be a little cautious, be a little conservative. I'll see you tomorrow.